This is the most critical video you will watch this year. The market is about to go parabolic, and you need to be prepared. If you're ready to understand this final warning, hit the like button, subscribe, and type interested in the comments. I will give you a heart. For every US crypto investor, this is what you've been waiting for. We're going to show you exactly why a massive flood of liquidity is coming to the market in September. And we're going to tell you why XRP, XLM, HBAR, and SWAY are about to lead the charge. This isn't about hopium. This is about an economic event with a 93% chance of happening. In the next 28 minutes, I'm going to reveal the exact catalysts driving this next major market move, and what it means for your investments. But what if the recent outperformance of altcoins isn't a new bull run at all? What if it's a trap designed to trick you into selling just before the real melt-up begins? We'll get to that in a moment. Let's get right to the point. The market is pricing in a 93.2% chance of a Fed rate cut on September 17th. You might be asking, why does a rate cut matter for my crypto? Think of it like this. When the Federal Reserve raises interest rates, it's like putting the brakes on a car. It makes borrowing more expensive, so investors pull money out of risky assets like crypto and put it into safer things like bonds. But when they cut rates, they're taking their foot off the brake and pressing the gas. They're saying, go ahead, take some risks. This unleashes a massive flood of liquidity into the entire financial system, from stocks to bonds, and especially into crypto. This isn't a small tweak to the economy, it's a fundamental shift in market psychology. For the first time in years, the gears of the financial machine are shifting in favor of growth, innovation, and risk-taking. But here's the twist that few are talking about. Trump's recent executive order opened up the doors for Americans to invest their 401k retirement savings into cryptocurrency, private equity, and real estate. This isn't a small change, it's a political move that's about to unleash a massive multi-trillion-dollar wave of capital. We're talking about a $9 trillion pool of retirement funds. Now imagine a tiny crack forming in a massive dam that holds back a lake of that size. The crack might seem insignificant at first, but once the dam is officially opened, that water, that liquidity, is going to rush out with incredible force. That's what's about to happen to your crypto. This is the single biggest policy change for US crypto in history, and it's a clear signal that the window of opportunity to be early in this space is closing. But here's where things get worse. What if the biggest beneficiary of this new money isn't Bitcoin or Ethereum, but a specific class of utility-focused altcoins that you might not expect? Right now, everyone is focused on Bitcoin. But that's a mistake. The real signal, the real confirmation that the largest wave is upon us, is coming from Ethereum. Think of the crypto market like a rock band. Bitcoin is the drummer. He sets the rhythm, the foundation. But the lead singer, the one who captivates the audience and gets the crowd going wild, is Ethereum. When the lead singer starts to shine, that's when the whole band, and the entire show, takes off. Just 3 hours ago, Ethereum surpassed $4,200 on institutional buys. BlackRock alone acquired over 65,000 ETH. This is not retail money, this is institutional money flowing in. We've been tracking this, and we warned you about the short squeeze. We're now just 16% away from new all-time highs on Ethereum. This is exactly what we want to see in Phase 2 of the market cycle, Bitcoin consolidating and Ethereum leading the charge, creating the liquidity for altcoins to actually go crazy. This isn't a new phenomenon, it's a historical pattern playing out in real time. But here's the critical piece of information you can't afford to miss. While Ethereum is the lead singer, which backup singers, like XRP, XLM and HBAR, are positioned to steal the show and go absolutely parabolic? Let's talk about two of the most popular altcoins in the market, XRP and XLM. They've both been consolidating, but that's what makes this moment so important. We saw XRP run to $3.65 after its recent lawsuit resolution, but it's been ranging since. And XLM has been following a similar pattern. Think of XRP and XLM as two sides of the same coin, brothers in the world of financial interoperability. XRP is focused on banking and institutional transfers, while XLM is focused on peer-to-peer and remittance payments. They are both building the bridges for the new financial system. Right now, they're both sitting at major resistance levels from early this year. But with Ethereum breaking out and a massive influx of liquidity on the horizon, these are primed to break out. The next major target for XRP, once it clears its resistance, is $5 plus. For XLM, the move could be just as violent. This is the moment for patience to pay off. But here's the problem. XRP and XLM are building bridges for today's financial system. What altcoin is quietly building the highway for the future, for a market that is about to become 1,000 times bigger? While everyone is watching Bitcoin's price, the real indicator of an impending altcoin season is the Bitcoin dominance chart. This chart simply shows Bitcoin's market cap as a percentage of the entire crypto market. And right now, this chart is screaming one thing: weakness. We just lost a major support level at 60.42%. This is the biggest weekly red candle we've seen in months. It's like a massive weight being lifted off the altcoin market. Money is flowing out of Bitcoin and into altcoins. The next major target for Bitcoin dominance is the low 54% level. That's a 9% drop from where we are now. In the world of crypto, a 9% drop in Bitcoin dominance is a massive flood of liquidity for altcoins, making this the perfect time to be accumulating. This is no longer a warning, this is the beginning. But there is one specific project, a project with a unique structure, that is perfectly positioned to capture this new liquidity in a way no other altcoin can. And it's not XRP or XLM. What if the very thing that people criticize about one altcoin, its corporate governance, is actually the secret weapon that will make it the next explosive moonshot? We're talking about HBAR. It's not just about the old guard. The new generation of altcoins is also starting to heat up. We've seen incredible gains from projects like Sway, which is up over 358% in the last year. These projects are cooking. Sway is an innovative Layer 1 blockchain with a focus on high throughput and low latency, making it ideal for gaming and other applications that require fast, seamless transactions. While its chart might look like it's had a big run, its long-term potential is still massive. The fact that these newer, more innovative altcoins are seeing this kind of performance is yet another sign that the market is beginning to feel the momentum. The money is starting to flow, the rotation is in full swing, and every project with strong fundamentals is beginning to get its time in the sun. But here's the ultimate payoff, the one that ties this whole story together. What if the final explosive phase of this entire cycle isn't about what a crypto project claims to do, but about what it is actually being used for by the largest companies in the world? We've been talking about the big picture, the rate cuts, Ethereum's dominance, and the flood of liquidity. But all of that money has to flow somewhere. And while XRP and XLM have their roles, the final explosive climax of this market cycle will be driven by real-world, enterprise-level utility. And that brings us back to HBAR. Remember that question we asked earlier: what if the corporate governance of a project like Hedera is actually its secret weapon? The answer is this: the biggest companies in the world, the ones that control the flow of trillions of dollars, don't want to build on a decentralized experiment. They want stability, security, and a governing council that they can trust. Hedera has spent years building this foundation. They have partnerships with giants like Google and IBM. They are working with the Australian Central Bank. And most recently, they are partnering with NVIDIA to power the future of AI. The money isn't just flowing in from retail investors. It's being poured in by the very institutions that are building the next generation of our economy on the Hedera network. This is the most powerful signal of all. It's the final confirmation that HBAR is not just a speculative asset, but an indispensable piece of global infrastructure. What has been a slow and steady climb is about to become a vertical rocket launch. The liquidity is coming, the tech is ready, and the institutions are already there. This isn't just about HBAR hitting a new price. This is about a global shift in how value is transferred. The next time you check your portfolio, you might just be looking at the final mind-melting push that changes everything. This is a crucial time in history. The financial system is being rebuilt. The old rules are being rewritten, and the new ones favor those who are patient, informed, and positioned correctly. You, as an investor who has held through the chop, are now standing at the precipice of an incredible opportunity. The final warning has been issued. The pieces are in place. The September catalyst is locked in. You are no longer just an investor, you are an early participant in the new financial system. Now, if you want to stay ahead of the curve and learn about the next potential catalysts for HBAR and the broader crypto market, make sure you watch this next video right here. In it, we dive even deeper into the latest Hedera hashgraph news and analyze the key events that could trigger the next big move for the entire market. Hit that like button if you found this analysis helpful. Subscribe for more in-depth crypto insights. And let me know in the comments, are you buckled up for September? Thank you for watching. Stay informed, stay empowered, and I'll see you in the next video.